Good afternoon, everyone. BC Richfield here, coming to you live from London. It is spot on 1300, which makes it midday UTC. Big shout out to everybody joining the stream live today, and a special mention for everybody that can't quite make it live but is going to watch this on recording. So do me a favor and let me know if there's any issues with the visual or with the audio, and if not, then we're going to crack on. So we've got quite a lot that I want to cover with you guys today, and we want to make some time towards the end of the stream to take some chart requests as well. So if there's no issues with audio and video, doesn't seem to be, nothing coming up in the comments. Perfect. Well, let's crack on then, guys. So we're looking today at Bitcoin, all right? So in terms of the narrative, which has been getting pretty bullish, you know, if you look across crypto Twitter, bits and pieces like that, you can understand why, but I'm going to explain to you my thoughts and feelings on it, why I've been a little bit bearish going into this. Not, you know, time frame is all about the context. Diamond Lily, thank you very much for confirming the sound is all good. So, yeah, for me, time frame, context is absolutely everything. So when we run any kind of key level, and I'll explain to you guys what I consider to be a key level, then I want to see the reaction there. And then I'm always considering the macro bias, right? There's no doubt, we'll look at the high time frame stuff shortly. There's no doubt that we're in, still in a massively bearish trend on the higher time frames, right? It doesn't mean we're not going to get these rallies off the back of them. But until we see some sustained bullish momentum, some key market structure breaks, then we have to assume that the risk-off attitude of the macro environment is going to play its part in how we trade, okay? So I thought I'd start with the 4-hour chart today, all right? So for those of you that don't know, I like trading things into key levels. I see most things as ranges or reversion trades. And what I want to do is I'm waiting for price to come and interact with a key level on a higher time frame or a medium time frame. Then I'm building my bias. I use divergences in order to catch momentum shifts in the market. And for me personally, what you'll see on the screen, the little black and grey dots are from B Pro, which is the Burbicator Pro, which is our in-house indicator. And it just measures the divergences across a number of different indicators and then gives you an all-in-one kind of solution with a percentage attached to that to increase the likelihood. So if we're looking at the chart here, for example, we can see when we come into this key level here, we get our bearish divergence again here. And that's what's made me think that we're going to have a corrective move here. Now, the corrective move could go deeper. We just don't know that, right? We can make our assumptions, but as long as we stick to a strategy and stick to our bias, right? We want to fit our high time frame, medium time frame bias, and then we want to trade within that. We don't need to fight the trend. We don't need to catch the reversals, right? We can get within a trend, find that trend, get onto the lower time frames, and then find our executions down there, which I'm going to show you guys in a moment. So let me just make this full screen. You don't need to see my little logo on there. B Carter, hey buddy, is this the Bitcoin futures chart? Yes, that's correct. Yeah, BTC perpetuals chart. So, and again, you know, it sounds like a simple question, but they're all simple questions, right? Until we get to a stage that we understand them. A lot of questions that I get, people saying, okay, why are you using perpetual chart? You're not using spot, etc. Well, you get slightly different moves on the futures contracts, right? That you're not necessarily getting on spot. So you want to make sure that you're plugged in for what you want to do. I do a lot of day trading and scalping. So for me, it's really, really important that it needs to be really, really accurate, as it does on any time frame. But what you'll find on futures is you get a lot more of these larger wicks, all right, because of the volume that's being traded. And especially across different exchanges, all right? So what are we looking at here? Let me zoom out and give you a high time frame view, right? So for me, I want to know key levels, right? And I'm looking for where the market stopped, and or, you know, for a better kind of term coined again by the wonderful SC, and some other guys out there, is what's capped the market, right? And I really like that term because it's a really, really good way to explain it. So this would be a cap here for me. So we've got this line going on, this high here, right? And let me zoom in, make sure that's nice and big. Guys, if it's too small for you or anything, or there's any issues with the audio, do let me know in the chat. B Carter, you're more than welcome, buddy. So we've got this high here, right? As prices moved up to this high, we haven't been able to progress beyond it. When we did get beyond it here, what we noticed is we couldn't close beyond it, right? So I'm really interested in the bodies of the candles, right? And where they finish. So With that, we've come back in here, we've taken any liquidity above here, closed back within, and then we've had this big sell-off to the downside. So now, on a lower level, when we're looking at what's holding the market up or capping the market's downside, we've got this wick here that we can see when we came into, we tagged this very marginally, had a really big bullish response to that. We've then come back into this for a second time, now a third time. And this is what was giving me confidence down here at the lows, that we can look for an expansive move further up. All right, so I've got my B Pro on, so we're still showing we had this B Pro bullish divergence here, which has played out. We haven't had a bearish one yet. And actually, when we look at it on a weekly scale, we can see here that we're really just kind of, in this kind of consolidation, right? This is the kind of tighter consolidation or the range that we've been playing from here, from side to side. And this kind of all plugs into our bias, right, guys? Because when we look at it and you see the kind of bullish bias that's coming out, well, on a high time frame, you can understand it, right? We've run these lows, we've taken the liquidity under these lows, and we're now using it to push up higher. Now, when we trade any kind of range, if we deviate below the range or fake out and close back within, then we always target the far side of the range via the midline, right? The 50 line. So when we look on the lower time frames, I'll show you this red line here, which is a key SR level for me, and why that's marked on there. But that basically represents the 50 line of what would be this trading range here, right? Now, if we take this level and we pull this further back, we can see that we interact with this high here, right? Now, why is that significant? Now, I want to know what's going on in terms of recency. I've got high time frame levels as well, which I keep off the chart. I use them for my analysis, but for that, I'm breaking down into weekly, monthly scale and finding just a handful of really key levels because I want to know when those historical levels have been tested. Now, at the moment, I'm interested in what's capping the market here. But if we track this back, we can see that when we made this high here and we failed to get beyond it here, again, we ran it, deviated, came back down towards the lows. Then we had this indecisive doji candle here. When we pushed up and we closed above this level, we then retested it here, and that gave the momentum for the sell up. However, this here was then capped itself. Okay, whether you're considering this level here or the one above it here, what I like about this level here is we see as it runs across, price can't get beyond it, closes below, then we have this, which is a deviation, and then we have this really, really big sell-off to the lows, okay? So price couldn't build on that momentum and it couldn't push any higher. So then when we get back within this range, as we can see here, we close back in here, we retest it, what do? We sell off back to the lows, all right? So I suppose the message for this really is, and certainly how I look at the markets, is this constant hunt for liquidity, right? So where's liquidity? When price gets comfortable at a level, or when the market accept that there's too many buyers down here for the price to keep going down, then it's going to go and hunt down where the next liquidity is, the upside liquidity, which was above here. So if we now pop this down onto a daily, and all we're doing with this, guys, what I like to do is we're just telling a story as we go through. Why is price doing what it does? Sometimes when we look at markets, I remember when I first started out and I'm looking at these lines and boxes and everything everywhere, and people are talking with such confidence about, look, if we go up here, then I think, if we close back in here, we're going to go down to here and so on. I remember it just all seemed a little bit overwhelming. I'm thinking, like, what kind of magic thing exists in these lines and levels that's going to make that happen? And actually all it is, it's a reflection, first of all, of psychology, how we think as people, but it's also how markets work, the ebb and the flow, right? Between buyers and sellers, between supply and demand, right? So if we've got a really high demand for a product down here, be it Bitcoin, be it anything, right? And this applies across the world to any asset. If we've got a high demand for it, then that's going to push prices higher. It's going to push them even higher if you've got a high demand and a low supply, all right? Now, price runs down into this level here. We've lost the confidence, right? And then again, that's why when we look at this is such a key level here. All right, we're going to mark that in blue. So that represents our daily level here. And we can see when we set this high, price sold off, right? And then we've taken liquidity below these lows here. We've come back up. And again, we've tapped into that liquidity. Price isn't ready to hold that yet. And we've sold off, right? However, we've not broken down here. So we've retained the bullish structure. We've got our higher low, higher high, right? So then when we set this higher low, and then we have another go up here, what we do again, as you know, is yes, we close a couple of candles here. but this ends up being a deviation. Then when we close back below this level, we get this retest here, then price really sells off aggressively. Now, the reason for that, if we're thinking it from a psychological standpoint, and I'm not talking and trying to teach you guys about psychology, you really need to follow Jimmy for that, my NLP coach. But in my mind, I'm thinking, okay, if we've just got a load of people up here ready to sell, yeah, and that's what they want to do. You want to get price driven up here, right? And then filling these orders up here, and then price sells off. Now, if I was institutional money, if I was smart money, and I'm looking at the way this market's developing, I'm thinking, you know what? I don't think we're going to break this momentum here. I do think we're in for a push lower. Then I'd want to get price driven up into here, right? Because we got to remember, whenever we open a buy order, whenever we go long, our stop loss becomes a sell order. The same way as when we're in a sell position, our stop loss becomes a buy order. So if people are all buying into this, people are all buying into this like crazy, then what you're doing is you're creating those orders to be filled by people that want to short here. And institutions will be doing that with a lot of money, right? So you'll push people up into here, people get long, price comes back and takes them out. Push people up into here again, take out these highs, people start going really long up here, right? Then you flip that liquidity. Then you're filling those sell orders, right? And when enough of those are filled and the momentum then shifts to the downside, we get these very fast moves down, all right? So that's what I'm looking at in terms of how I'm viewing the market. Now, when we look at the current price action, right, and we look at these levels, well, what we can see here, we've got our weekly levels that are in teal, right? And I'm going to change this to a slightly different color so it's less confusing, right? So let's just make it black for now, all right? So this level is of keen interest to me because when we cap the market here, we can see how many attempts price had to get beyond that and failed, right? Then the fact that the market lost the confidence, or the fact that there wasn't any buyers taking up above there and sellers stepped into the market, we had this flush down here. Where to? Just below our weekly level, right? Took that liquidity. We got our divergence on a daily scale, which is really important. We're closed back within the weekly level. Then we have this huge impulse move to the upside, right? So it's wiped out, taken a lot of liquidity down there, taken out, filled a lot of those, taken a lot of people out. And then we've had this impulse move up. Then what this impulse move up serves to do is take the liquidity above the highs, treat this whole move as a deviation above this high. When we then have this big sell-off here, we close back within this level, retest it, get confirmation of that. We then move to flush the lows of liquidity again, all right? So once again, once we've done that, we're looking for confirmation, right? So we get this flush of the lows here. Right, and now what we're saying to ourselves is, okay, that's the flash. Look how big this wick is, this downside wick. That's showing us price tried to get all the way down here. We had this huge buying pressure that took us all the way up to here. Now, people offload their positions, they're closing their positions out, which causes this little bit of a pullback here. But also you can think of it in another way, that if I was looking to, and maybe manipulate is the wrong word, but if I was looking to control this market and I wanted to get my buy orders filled at the lowest possible price, I would want to be pushing price down, 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 down into here, right? So then when price is pushed down into here, we take the liquidity below. Now the question is, can we hold below here, this low? Do we close below that, then look for a retest to push lower, right? Or do we deviate here and close back within this range? Right? And that's what made me bullish, especially when we got our divergence. This is a 73% bullish divergence on B-Pro. This was a 91% bullish divergence here. That to me gives me a lot of confidence that there's momentum shifting to the upside. The other thing that I look at here is the bullish divergence that we've got on our RSI. And yes, we're stacking some hidden bearish divergences along here, which lead to these kind of pullbacks in the overall trend. But once again, we continue with our B-Pro bullish divergence up to here, which we're still in. And then we get this bullish divergence here on the RSI as well, which gave us the heads up for this kind of long move here that we took with inside the mother bar. So zooming in a little bit more, what I want us to look at here is the mother bar pattern that we've been playing. Now, for anyone that isn't aware of the mother bar pattern, right, what we've got here is a mother bar is the first candle in an inside bar pattern, okay? So an inside bar pattern is we have this mother bar, which is the larger candle. For it to be a valid inside bar pattern, the following candle, which is this one, has to close within its range. That means it can't go higher, right, than this, and it can't go lower than that. Once it's in here, yeah, then what we can see is once that candle closes, this forms the inside bar. What this gives us is a range, right? So let me hide this for a second. And this range is like any other range. We've got our inside bar range, our inside bar low, inside bar high, which is what they stand for, mother bar high, mother bar low. Now, the theory is, with any range, when we run the lows, if we close back within the range, we then target the highs. I do that, and like a lot of range traders, I'm doing that via the 50 line as well, right? So my first target when we come back in here, obviously on a lower time frame, is I'm looking for price to run to the 50 line, right? Then if we come above and close above the 50 line, we're then looking for a push up towards the range highs. So the inside bar provides our micro range within a larger range, okay? And you'll notice these patterns. You'll notice these patterns often. We have this one, for example, this large mother bar candle here, this inside bar. We have all these inside days until this candle here runs above the mother bar high, yeah, and then comes back down, and then we have this big sell-off towards the lows. Inside bar patterns are indicative of markets slowing down, of indecision, right? And when we get that and we get these smaller candles, the smaller bodies of the candles, right, then you're looking for expansion beyond that. So with that in mind, when we ran these highs here, this is when I started to get interested. Now, what I really wanted to see is some kind of divergence, right? So let's pop down onto our 4-hour chart. Now we know what we're looking for. So when we got our bearish divergence up here, right, and it's not ready at this point, yeah? So we get it here, and let me mark that out for you. Now we have to remember when we're marking these, yeah, we're marking them on the candle after the divergence. The divergence candle has to close, all right? Consti, hey buddy, thanks for joining the stream. Always welcome here. Just before I go on to this point and break this down, let me just deal with that. So just got a question here from Jojo. Hey Jojo, is there a way you can figure out the size of the next move by the size of the divergence? Yeah, really, really good question. So for me, what I'm looking for is I'm looking for the divergence to be a trigger point, right? Somewhere that I'm getting confirmation that price is ready to reverse. And then I'm targeting levels, right? So you can look for convergence, right? Which is, for example, when we get this divergence here is a good example, right? So we get this hidden bullish divergence. Now the divergence is coming down, and then you can say to yourself, okay, well, how do you know when it's valid or when it gets invalidated? Well, what you can look for is your converging wave, right? And what I look for quite often on something like the RSI is if I've got this down here and we're making lower lows, lower highs, I'm looking for the break of that, right? So even if we just took a line across here, and I know you guys should follow JTrader as well. Trading Tank, absolute legend. He does this with the OBV and unbelievably sick with it, right? And OBV, I think, with this kind of stuff is it can be a little bit more relevant, right? This is a little bit of a kind of hack that I do, but it just gives me the extra confirmation that we're going up from here. Now, when we get that, or even this, for example, or this, right? Any of these divergences, what we're targeting are key highs and key lows, yeah? So, for example, even if we just run through the divergences that are on this chart. So for me, if we're getting this divergence down here, we close back within the range, and then I'm looking higher, right? Then I'm targeting the prior highs, yeah? Or definitely the order block or the up move, right? As we can see here, that leads to the change in market structure. Now, we didn't quite get there on that one, all right? You know, you could argue that maybe it's kind of got caught up coming from this consolidation here, which would be a higher time frame order block. But typically, as you'll see with this one, when we run this divergence, we're targeting the prior lows. When we run this divergence here, we're targeting these prior highs, which we hit over here. This divergence here, back into these highs, this divergence here into these lows, right? So for me, I'm thinking of it in terms of liquidity, right? Where is price going to run to if we take this divergence, right? So look, if we just take a look at that, let's do these in really bright colors so they stand out, yeah? So we've got that one. We get down here. This is the high. We get these bullish divergences here. They're running for the liquidity that's above those highs, all right? It also works in the same vein if we get a divergence here. So, for example, this divergence. Why did I pay a lot of attention to this divergence? Two reasons. One, we've run a key weekly level. And two, we've also taken out those key lows there. Again, liquidity, stop losses, orders, all placed below these lows, right? So we're looking to say, okay, if I was smart money here, if I was institutional money, where do I want to buy it? And this sounds like the most ridiculously simple thing ever, right? But all of us want to do it, but institutions especially, they want to buy low and they want to sell high, right? All we need to ask ourselves is where are the key highs and where are the key lows, right? So, and it doesn't always work that cleanly, right? You know, we use this as an example. This divergence, brilliant. We target these lows, worked perfectly, right? And then this bullish divergence here, right? We would be targeting these highs here, or certainly, as we said before, the bullish, at least the bullish candle or the bullish up candles before we get that move lower, okay? So as we did that, price comes up and tags this. We get this bearish divergence, right? And again, what do we want to do with the bearish divergences? We want to target these key lows, right? Because, and the reason I call this a key low, yeah, these ones are quite obvious because they're swing lows, right? But something else I'm really interested in, and henceforth when we look at this candle here, the big wicks on either side, is when you see these really big wicks, what it's telling me is that there's big buy or sell pressure there, right? Price tried to make its way down here and it wanted to head towards these lows, but there were too many buyers. So we have this big reaction to the upside, right? Brilliant. Once we see that, we can use that, right? Because then we know where there's potentially buyers. So if we push back down into these levels again, then we know where the buyers might be. That's what actually gave us our mother bar here when we look at this candle, right? Look at this big candle here. Then price comes down. When we drive and we clear out these lows here, we drive and then we take out the highs of this candle. So in answer to your question, Jojo, is for me, my level of expertise with divergences in terms of how long they run out until they're invalidated is limited to what my understanding of it is in terms of where I trade it, right? So I'm sure there'll be some amazing technical minds out there, especially your guys like Burb who are, you know, so well qualified in CMT. For me, what I'm doing is I'm using it in terms of once I get the confirmation from this, and I'm looking for this, the close of the next candle, and I'll show you this move here, the short opportunities that we had from up here. But I wait for that candle's close, which is here. Yeah. I then want confluence from a key level to say, okay, what else is the reason we could be reversing here? What liquidity have we taken? And we can see here all this beautiful liquidity above the highs here. We got this key SR level. We've taken out the stops that are above here. We've taken out any liquidity that's sat above here. For me, the most logical time for this to correct was here. And especially when we're coming back with inside this key SR level, and even more so when we're breaking back down inside the mother bar range. All right. Now, there's a lot of bullish momentum in the market, right? We can use our RSI as well to help out here. Look, we can see that we're up here in overbought. See the last time we were up here in overbought, right? And one of the best ways that I love to play the market, we can see again here a really good example of when we're up in overbought. Now, we need extra confidence with this, right? Because as we can see here, the RSI can spend quite a time in overbought, and you wouldn't have wanted to be shorting this big move up, right? But if we look and we have our key parameters, we can wait and we just need to be patient, okay? So like for this one, for example, fine, we got this huge sell-off candle here, but we had all these stacked bearish divergences starting to come into play here. So as we were looking up here, we move on to a lower time frame. When we close back within this range and get confirmation, then we've got a really, really clear target of this SR level down here. Again, when we lose that SR level, what do? You can see here price desperately trying to push up, right? And it just can't. And then it just sells off back down to the lows. I like to think of it like this, right? If you think of liquidity as fuel, right? What you've got is you've got a plane or a train or a car, whatever you're using, right? You're going up into this point here. Now, if you can fuel up enough here, you've got enough fuel then to push on and take a higher leg, right? You know you've got enough to go cross country and you can keep going further. However, if you get here, right, and you can't get enough fuel, but you know you've got enough fuel to make it back to the previous fuel depot, which is back here, then typically err on the side of caution, price will come back down and search for that low side liquidity. Now, if it finds enough of it here, then that could be enough to really rocket it up further, right? And that's why we play these level to level, okay? So, just got a couple of questions here, guys. Muzamil, hey buddy, where do you see the market going short term? I think it's quite tricky, actually. I think there's a lot of bullish momentum in the market at the moment. The DXY looks like it's having a pretty solid pullback, showing that maybe the market's got a bit more appetite for risk. My problem with that is more from a macroeconomic standpoint. And, you know, I'm not saying I'm a macroeconomic expert, but it's something that I've always paid great attention to through my trading career, because that narrative really does affect the market, right? Whether we're risk on or we're risk off. The DXY for me is just a great indicator to symbolize the market's appetite for risk, right? And if the DXY is running hot, then, you know, things are obviously not particularly looking good for risk assets. If the DXY is pulling back, then it means that we've got good potential upside for risk, right? So crypto is a risk asset, BTC is a risk asset. I'm happy to discuss it with anyone that thinks that it isn't or whatever, but for me, until it decouples from key indices and equities and stuff, then it's clearly a risk asset, or it's clearly behaving like a risk asset, okay? Which means that in terms of what we can use in our favor, we can use things like the DXY, which is the dollar index, to gauge strength and say, okay, well, look, if the DXY is pumping really hot, then, you know, the chances are that risk assets aren't going to be doing great, and vice versa. Yeah. So I don't know if this is going to give us our best indication. No, what I'll do is I'll show you on the DXY chart. But basically, when you extrapolate this and you put the DXY chart on here, it gives you a line graph, and you can basically see the reverse correlation, right? So as we hit our high here, we can see the downwards momentum here. We hit our high as price sells off in Bitcoin. We can see how the DXY starts to pump higher. All right. So that's one thing that you can use on the charts. But we will take a look at the DXY, all right? Because then when we look at that and we put those levels together as well, it gives us a much clearer indication. So for me, and I'll run into this on the lower time frames, my short-term bias is if we're holding below here, as long as we hold structure, I would want to see some key market structure breakdowns in order to make me believe. So if we come back and retest the mother bar high, for example, and then start to break down, then I think we're coming back to the inside bar high, right? This kind of level here. Because I think price is going to kind of come down to search for liquidity somewhere. So my short-term thinking is that we're heading back for a corrective move down to this kind of area. Now, for those of you that are Fibonacci users, and definitely go and check out our boy Razoon's stuff. Yeah, he's unbelievable with his fibs, all kinds of magic levels. So now if we pop that on here, let me just take this away from a range fib. Then what we've got beautiful confluence with here is our inside bar high is lining up perfectly with the golden pocket, right? So for me, I'm thinking, look, we could get maybe we get a reaction here at the 382. Yeah, possible. Shows that there's strength in the trend if that's the case, in my opinion. We could get a reaction here at the 0.5. But the most likely target for me is the golden pocket, right? And I think that if we're going to see any kind of bullish momentum around there, I think that's going to tell us that maybe there's a more sustained move higher. However, if we do reverse at either of these levels, the 382, right, or the 0.5, typically that means there's more strength in the trend, yeah? This will be the key target. But I think if we start, building some structure here, microstructure on the lower time frames and look to push higher, maybe this is a little bit more of a short-term corrective move, all right? So my current bias short-term is that, as it has been from up here, is that we're due a pullback, right? So it's just a case of where this pullback finishes. For me, this isn't the time to jump on board. I'll show you what I would do in order to look to get involved in this. But the key here was to wait for us to get back inside the mother bar high and then on the lower time frame scalp this down. I don't know if any of you guys follow Trader Dank, but you absolutely should do. DAINK. Unbelievable trader, price action trader, took a 6 short this morning, reads all of this stuff without divergences or anything, just looking for market structure, and have the pleasure of knowing the guy quite well now. And just a superb trader. You guys should really check him out. Similar views on the market, right? So we're waiting for key levels to be interacted with, extremities, if you like, of a range, or support and resistance, like Monday's high, for example, or prior week's high, prior week's low, and then you're monitoring that area to find patterns and to look at ways that price may break down by losing key structures or support and resistance. So I hope that's answered your question, Muzamil. Sachin, thank you very much. Up, quality. Jojo, I use the volume profile when range trading and a fib when trending. Yeah, absolutely. I know a lot of people do very similar. Fibs are fantastic when we've got a trend. Obviously, very, very difficult to use them accurately in any kind of chop. They can be good to kind of gauge market strength, looking at where the market's taking its bounces from. But yeah, absolutely. Volume profile is a really, really good way to trade. And if you like volume as well, Rezoom and Bast are sick users of that. And again, you can look at JTrader, who's trading tank as well. His use of OBV is really, really excellent. So what does all of this mean? Well, for me, it means that this could be a corrective move, yeah? Or it could mean that we're about to flush a lot deeper. So I don't know, right? I don't know. What would give me more confidence would be a shift on the daily. So I really like to use the daily to gauge trend, yeah? So obviously, I'm talking about sort of interim trend here, right? So if we're looking at things like this, for example, and we're saying, okay, well, if this is our uptrend here, just for argument's sake, then what your divergences typically do are pick the corrective moves in an ongoing trend. Yeah. So we got this, bang, pick this, came back down into this level, divergence, back to this level, divergence to this level until you get the divergence that leads to the correction, to the longer correction, sorry, that leads to the reversal in trend. So with that in mind, looking at your support and resistance levels are key as well, right? But the other thing that we can do is we can use these to give ourselves like an interim trend, right? So if we're looking at the divergences and we take the following candle, yeah, in all of these examples, you would have given yourself some really, really beautiful trading ranges here. 10% here, the same there, a little bit less here, right? But again, right, this is another trick that you can do when you're looking to gauge strength is when we measure the moves, yeah, the corrective moves, you can see how they're deeper, and then they're starting to shallow off here, right? Starting to compress a little bit. The other thing that's happening is the distance between the highs is lessening, right? And what it tells you is you can almost see this curve, right? If we take out our... Yeah, and you can see how this is kind of curving round, flattening out. Yeah, it's showing you that the momentum is starting to wane and that you could get a possible reversal. Again, nothing's ever certain in trading, right? The market and price will do whatever the hell it wants to do. What we want to do, or what my approach to trading is, I want to make sure that I'm on the right side of the institutional buying where I can be, that I'm buying and selling in the right areas, and I'm looking for interim trends that I can day trade, right? So by that, what do I mean by that? So let's have a quick look at Bitcoin. So let me mark this in bright green. Let's go for some neon colors today, right? So I'm going to mark these, right? And the bright green is going to dictate our daily trend. Yeah? So this is our daily. Now, when I jump onto a 4-hour chart, because I don't want to argue with the daily trend, right? So on a daily trend here, we've got our 4-hour confirmation here as well. So 4-hour divergence. We get that slightly before our daily confirmation of trend. What have we got? RSI down in oversold, showing us that there's upside potential. That's good enough for me to combine that with the fact that we've had a support of a weekly level to push higher. I've got a nice clean target above these highs. All right. Now we get the same thing here, right? Price comes in, we get our divergence, we get price down in oversold. Now, what would stop us entering here that means that we would enter here? Well, support and resistance, right? We've come into a key weekly level here. Here, we're kind of hovering a little bit in no man's land. Would I trade this? Possibly. I'd need to look left and just make sure there was some kind of confluence from a reason as to why we might be rejecting here. It could be this down move before the move higher, right? So again, you can take that, you plug that in, you can drive into your lower time frames and find potential entries, right? So this one's excellent. This one, you might have taken a small loss, or to be honest, you'd probably have still scalped to profit on that, and I'll show you how. This one I really, really like because we've got our confluence here. We've basically got the daily divergence on top of the 4-hour divergence. What have we done here? We've run the weekly level again. We've also taken out the liquidity. Let me just zoom in a bit for you guys. We've also taken out the liquidity below these lows, below this low here. Then when we've come up, this candle where we've got the divergence, when we close back inside the range here, that's when we're getting a bit excited about this. This is when we're saying our high probability trades are now to the upside, right? So again, 4-hour divergence allowed us to get in here. 4-hour divergence allowed us to get in here. Now, what gave us confidence in these 4-hour divergences? Knowing our simple high time frame levels, but also knowing that we're within the daily trend, right? So how can we break that down further? Why was I entering here? Well, I'll tell you, because we've got 4-hour trend. So the red arrows are going to stand for our 4-hour trend, right? So we've got one there, one there, one here. And then let's do the ones to the upside as well, which we will do in just a darker green. So we separate them away from our daily. So obviously we want to be trading, right? We want to be trading with the trend, right? The trend is your friend until the end. Yeah. Brilliant saying that an old friend of mine or someone who became a friend that when I first got into trading. And it's very, very true. Yeah, you don't have to catch tops and bottoms. Wait for the trend to develop. And you can get on micro trends, right? People all over the place. And this is no criticism of people. I'm not overly critical of people unless they're particular a-holes about something or they're being massively unconstructive to someone that's trying to ask for help. So I know people have their different methodologies and that. But for me, don't try and catch tops and bottoms. Wait for trends to develop. If you're a swing trader that plays the higher and medium time frames, it's been very difficult to get any swing trades in at the moment, right? But there's price is fractal, so you can find the same patterns on lower time frames if you have the time to trade them. So green arrow represents our daily trend, yeah? So our daily trend is up. That's given us 1, 2, 3 successful trades on a 4-hour scale. Now, if we decant that down further, right, and we say to ourselves, the 4-hour divergences, these ones that we've marked here from BPro, the red being bearish and the green being bullish, are dictating our lower time frame trend. Yeah. So, for example, if I then want to go on to a 15-minute chart, this is why we were short up here. Why? 4-hour bearish trend. Yeah. Then we get our bearish divergence here on the 15-minute. What we want to see is going on to the lower time frames to execute. We can do that on a 1 or a 3-minute chart. Yeah. We've now got our target. And let me just show you with this example how I would trade this, right? And let's make this bright pink, yeah? So where have we got our confluence? We're at a key level, rejection. We've got 4-hour bearish divergence that's confirmed here. We wait patiently. We don't just FOMO in, because if you FOMO'd in, you would have got taken out here. We then get confirmation from our 15-minute bearish divergence, which is our pink arrow. We have an RSI that's up in overbought, yeah? These points, these are all pointing for me towards a potential reversal. All right. So what I would then do is drop onto a lower time frame. I love using the 1-minute chart because I like seeing as much microstructure as possible. While that loads, I'm just going to sip my tea. That's the problem, guys. I talk too much, right? And then every stream I make myself a cup of tea and I must get about 3 gulps that are actually warm. Right. So what do I want to see here? What gives me the confidence that this is going lower? Well, there's 2 ways that I would play this, right? So I like looking for liquidity to be taken. Yeah. So for example, we've got the liquidity from these highs. We run above these. This gives us an area that we can look at. So where we've run the liquidity here, up to here. So let's mark the liquidity there, down to the base of that. Drag this across. Now, when price comes back into our point of interest here, we can see price kind of meanders around for a while, kind of making its mind up or not. Then when it comes back into this level, this consolidation here, or this break, this liquidity grab above and then a close below, right? That's the first sign for me that the market's getting ready to go lower, yeah? So then what we can say to ourselves, okay, is when price comes back into this level, which it does, if it reclaims this level, price came up here, right? And did something like this, then I'd be looking to go long round about here, right? On this kind of retest. Because for me, price is coming in. It's tried to get rejected here. It's reclaimed that level. The momentum's clearly shifted. As price gets really, really low, we can see here on the RSI, if that tied in with us breaking above this high and retesting it, then I'd be looking for price to push up further. All right. But instead, what we got was the opposite. Yeah. Price came into this level here. As we can see, I'll draw it in for you here. Price came in, took the liquidity above, closed below, retested, and then sold off. All right. So this then becomes our opportunity to short. Now, the only reason we're getting these opportunities and the understanding of it all comes in from our higher time frame bias. Yeah. So let's go back to our 4 hour very quickly. Where did we gain this bias from? Well, we're saying to ourselves, okay, if 4 hour is our high time frame trend, yeah. So if you're a medium time frame trader, here's your daily divergence, yeah. Here's your key weekly and daily levels. Wait for you to get your divergence. Make sure the 4 hour RSI is in your favor. Wait for your 4 hour, 1, 2, 3, 4 hour divergences. Tells you when there's momentum shift. Drill it onto a lower time frame to wait for your market structure break, and then you're in. All right. If you're trading it and the 4 hour, as we're doing with this one, is our master trend, if you like, or the one that we're clearly looking at to set our trend bias, then we drill into the lower time frames and we say, okay, 4 hours overextended here. We've got our bearish divergence. We're at a key resistance level. We've had a rejection here. The other thing, guys, which I really, really cannot emphasize enough, and this is another area you really need to check out, BAST trader who's just sick with candlestick patterns, is we get this bearish engulfing candle, right? Now, for me, candles do not lie, right? It doesn't mean you can just trade every bloody bearish engulfing candle, excuse my French, like this one, for example, yeah? You're using it to add confluence to your theory. If you're thinking about a rejection here and you get this bearish engulfing candle and you get that 4 hour close, then you're kind of saying to yourself, okay, actually, I've got a little bit of extra confirmation here that this is looking to push lower. The same way as we get with these pin bar type candles here that you get to the downside, this hammer candle, right, with a long tail and then a smaller body at the top, or a long tail to the top and a smaller body at the bottom for bearish, then what you need to do is play that into your thinking, because the candles don't lie to you, right? Neither does price action. I know people talk about price action predicting the future. I don't think that's ever really been... don't ever think that's been the case. I think you can use it to find key levels. And for people that think support resistance levels are nonsense, I don't really understand that either, because it's just clearly a historical indication of where people have been buying and selling. And if people keep buying and selling at those levels, you've got a bit of a self-fulfilling prophecy on your hand, right? So this is how we build our bias. We're focusing on micro time frames at the moment. All we've done is we've taken a daily mother bar pattern, right? And you can do that just with simple highs and lows. We've got our key SR level here. We wait to interact with it. We get our 4 hour divergence. We drill onto our lower time frames, which in this case was the 15-minute, right? To say, right, have we got this confirmation? Yes. Okay. We were bearish from here. Remember, the red arrows are the 4 hour bearish divergence. We didn't FOMO in here, which is good. It stopped us getting taken out. Here was our bearish divergence that interacts with our key high time frame level. Now, depending on the type of trading that you want to do, and as I was just explaining here, I quite like to see the divergences. I like to see the RSI quite high to show me that it's ready to reject. You can build in what I call a breaker box, okay, which is this, which is telling me, okay, if we keep getting rejected here and we start to break down, that's what I'm interested in. And I can't remember if it was this exact move or maybe this one over here, I think that Dan caught. But for me, what I was looking at here was that is clearly support. Okay, support, 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 support. What do? We lose it, we retest it, then we get the sell-off. All right. That's what's telling me that. You can see the liquidity taken above the highs, closes below the lows. When we lose this and we retest it, because think about your risk to reward as well, guys, right? Even if we're just scalping it down to this level here, we wait for the price to be lost, we wait for the retest, we enter below the retest. Where's our risk? Above the prior swing higher here. Where's our target? These lows. Lovely 2.6R, low risk trade. You've got excellent confluence and you can hold it. You can move your stops to entry, right? So you can see even all the way over here, and you will get tagged out sometimes when you do that, right? But if you do, and your high time frame bias remains the same, then why wouldn't you just do this, right? Your high time frame bias doesn't just change because the 1 minute chart does, right? I get that. People say that a lot about stuff, right? They're just like, yeah, but I had it started to shift on the 1 minute. It's like, well, our high time frames, chart and bias stays intact. What we want to wait for is our lower time frame triggers. So we don't want to jump into the chart. So if we wanted to short it again there, right? Then what did we say? What are we still within? We're still within our high time frame, in this case, the 4 hour, yeah, bearish bias. We're in our 15-minute bearish bias. So what else can we do? We can say, okay, well, let's drop it onto a 5 minute, see if there's any reason that we shouldn't be trading it here. No, in fact, there's two very good reasons. Yeah, two 5 minute divergences that start to see the momentum shift. Then when we break down from this and we retest it, look at our RSI. We're coming down from overbought. We've got the divergences building. Where do we trade it to? We trade it into these lows, right? So for me, I would be targeting here. All right. So I'm looking for the down move. You see this move here, the last down move before price broke structure to the upside. This would be our order block. This would be target one, right? Then as we continue to break down, we wait for confirmation. At the moment, we take it, we take some profit, we'd move our stops to entry, which are up here, meaning that the trade is now risk-free. Now we're on here, and then we just wait for confirmation. If price starts doing this, starts building a structure, starts breaking higher, right? Then we can know to either cut the trade, right? Or we just, it depends what you want to do with it in terms of managing it, right? But I would certainly have taken profit here. If, however, price starts to do this, yeah, then it starts to break down, then that gives us our opportunity here, right, to short. So we don't have to always hold these positions for ages and ages. We just need to be aware of the time frame that we're trading on, right? And for me, my bias has been dictated a lot more from the 4 hour recently, just because whenever we're in sort of a range bound or a choppy environment, I find that a mixture of that between 15-minute and 5 minute divergences gives me really, really good indication. So again, like we are here, where we are currently, right? Now we're building another bearish divergence here. So we haven't got any reason on the higher time frames. If we go back up to our 15-minute, is B Pro giving us any bullish divergences here? No, it's not. We can even take a look at our hourly and say, okay, we want to be aware of what's building on the hourly. Are we building any bullish divergences? Absolutely not. And then on our 4 hour, are we still within a bearish trend? Yes, we are. All right. So we can see on my little RSI that I've got here, we're picking up a hidden bullish divergence, which again normally means a correction in an ongoing trend. All right. So I hope that makes sense, guys, in terms of how I'm looking at the market at the moment, the levels that I look at and the moves that I'm looking to make. I'm waiting for liquidity to be flushed above a certain level. I want to see my divergences, and then I'm just decanting that information down onto lower time frames. Something I do when I'm often working with mentoring students that you might find useful is if you take the vertical line tool, and then where you get your divergences, like we have this one here, remember, it's not the one that the divergence is on, it's the following one. Pop yourself a vertical line across the page. Make it a really nice bright color, yeah? And you're saying, fine, I'm only looking for longs on the low time frame while I'm in this bias, right? We've got another bias there for bullish, but then here we can see we've got bearish bias. Sometimes visually it can be a really, really good thing to do, right? Because it can kind of, it's the way that it makes you see the chart differently, yeah? And again, we know it's the same situation here. So then when we run onto a lower time frame, which we can do here, we're not entering any of these, none of these bullish divergences, they don't interest us. Bearish divergence, beautiful, lovely short trade. Bearish divergence here, all right. RSI not up in oversold, just wait for it to get there. Bearish divergence, lovely trade to the downside. Where are we here in this one? We're in a bullish pattern, right? So if we scale back here to find the green line, or we know we're in the green line anyway, we're just trading these moves. Let me just make that a bit bigger for you guys. We want to wait for the RSI to be down at our levels, right? We're waiting for it to be down in oversold in this case, and we get our first divergence here whilst in oversold. Nice trade to the upside, all right? And then you can play these different levels as you go, taking it level to level, all right, guys? So I hope that makes sense. I want to take a very quick look at the dollar index with you all as well. Let me just clean some of this up. But yeah, I like using vertical lines, especially when you're kind of trying to get into this this trend bias, right? Because you just look back, okay, there's my vertical line there, bang, I know I'm only looking for bullish trades or I'm only looking for bearish trades. So, got a couple of questions that I'm just going to run through very quickly, guys. B. Carter, sorry, I'm new here today. Do you do this stream every morning? Find it really helpful. Thank you. Thanks, B. Carter. No, so I'm live on a Monday and on a Wednesday. There's information for the company that I trade for and with, which is the Bird Nest, which you should be able to find in the description below. But if not, just pop me a message on Twitter. We got a great trading community over there. That's where I do all of my trading. I obviously do some bits and pieces on Twitter and YouTube and stuff like that as well. But if it's something you're interested in knowing more about, just drop me a message, or you should be able to find some information in the chat below, mate. Comsty, buddy, how we doing? I went short on the top, was scared when it pulled back. Little profit only, was absolutely unsure if we were really going down after steady push-ups. Yeah, absolutely. I mean, that's a really, really good point. There's a very, very dear friend of mine who's become a very dear friend that I've known through trading and through the Bird Nest is a guy called Jimmy, who is an NLP coach. His handle is your NLP coach. Please do go and check him out. Trading psychology is such a huge, huge part of it, right? I mean, huge, right? To believe in the bias, and especially when you start going into using larger amounts, holding those trades to key points makes all the difference between your P&L. Yeah, especially if you're a low time frame scalper like me, you give up a lot of your winnings in fees. So if you don't hold these things out to key levels, but it all comes from confidence, right? It all comes from confidence in your strategy, your setup, and those levels. I think there's kind of sometimes a bit of an unrealistic view of trading that's kind of communicated through social media, where people think, that traders are winning loads and loads of trades. And you know what? There's a few anomalies on there. SZ, who's, huge hero of mine in terms of who I learned some of the most from. EXO as well, another unbelievable guy. Dank, in terms of price action traders, right? Who I grew up studying them, ICT. I think those guys will have an exceptionally high win rate, but I don't think there's many people that understand these markets better. The average traders, right? And look at Pedro, check him out. Pedma7 builds algorithmic trading systems, absolute legend. One of his systems has like a 24.7% win rate or something, but it's 500, 600% x the money in the last 10 years. Yeah, so that kind of tells you everything that you need to know really about that side of things. It's all about the strategy, but I suppose what I'm alluding to, what I'm hinting at, is that it's all about taking the losses, knowing that your winners will outweigh your losers at the end of a week. Sometimes you can have months where you go on these unbelievable hot streaks. You last month before, whatever, 16, 17 trades out of 20, just winners, just things just flying off. My kind of environment, range trading, decent volume, I found it really, really good. But then you step into other months and you have big down months, right? The key for that is journaling, making sure you're staying on top of your understanding of it, and not trying to change your strategy or your routine, right? Get a strategy that works, back test it, forward test it, commit to that strategy, and then you just need to make sure from there that you're just executing on that. Yeah, execute. All right. And then when you want to learn about new stuff, set your mindset to another side and have the version of you that's the trader. All right. And then have the version of you that is the breadwinner, right? You're doing this for a living, or you want to do this for a living. You need to be able to bring in the money on a daily basis, right? And you're only going to do that by executing and committing to a tried and tested strategy. So in terms of levels and targets, one thing I would always say is look for any kind of impulse move, right? And then if you're entering down here, so if you're entering along down here, I'd be looking at the up move that led to the sell-off as a target, right? I would then be looking for a specific point, probably around here, that's capped the market, to say to myself, okay, that would be my take profit one, and at that point, I'm going to flip my stop loss to entry. Quick question here, and I will get around to the rest of you guys. 1 second. Just want to provide. So for anyone that's interested, right, and honestly, I mean, all of the guys that I've mentioned are worth a follow, and I do need to do a shout out. So do keep an eye on Twitter, and I'll pop all these guys into a chat for you. But from a psychology perspective, and this is Jimmy's handle on Twitter, guys, for anybody that's interested. Guy is just an absolute legend, just such a calm, collective presence, right? It's the way that he looks at things, the way that he trains himself, the way that the information he can give you can help you so much in terms of your psychological outlook onto the market, positivity, but also at the same time staying consistent, right? Which is so big. So do check him out, guys. And again, make sure you're not only taking time to work on your psychology and work on your trading mindset, but you're making sure that when you're at the charts and that you're not completely frazzled and burnt out, that you've got time, that you've got the inclination, you've got the ability to trade properly, right? Make sure you're making the most of that. And that kind of comes into my next point or next couple of points. I'm going to take care of these questions. I want to cover some timing zones with you, and then I want to just cover off DXY, and then we're going to call it a day until next week. All right, guys? So unless anyone has any chart requests, because I'll find time to throw a couple of those in at the end. We can overrun it a few minutes. So another question from Conzi: why did it go so low to retest the highs again? So liquidity, right? I assume you're kind of meaning like these kind of moves here or this kind of move here. We've taken out this high on this move here. Yeah, price took out these lows on this dip down here, especially at points of uncertainty, right? What you're getting is price just ping-ponging between these levels because this is where the supply is. Yeah, think of it as, again, like we talked about supply and demand. This is supply, which we'll do in red, meaning there's sellers there and lots of them, right? And this is our demand zone, meaning that we've got lots of buyers down here, all right? So think of it like that. When people are selling heavily, price is now not really sure where it's going. That's why it's not a good idea to take trades in the middle of this kind of stuff, right? Get these big wicks come and take you out. Ultimately, price is looking for the next largest batch of buyers that can pump the market, which it finds here. It then goes up to try and find it up there 2 week, dips into it again, retests, big impulse move up into where the sellers are. The buyer pressure then turns into sell pressure, which pushes it back to the buyers. This then ultimately pushes it back to the sellers. And again, what we're saying here, the only question now is this ready to get above? In which case we can look to go long. Or has this just gone in and now once again is taking up that sell pressure and those sell orders are filled and price is looking to go down? All right. That's a really good way to look at it. B. Carter, how do you know how to make those rectangles, buy sell zones? What parameters do you use? So in terms of where I'm looking for price to go, so in terms of rectangles, I'm often using order blocks, right? So a key order block, and to get really deep into your order block theory, there's some brilliant resources available at the Nest, also on YouTube and bits and pieces. Because the more valid the order blocks, you really don't want to see these wicks kind of coming and taking them out. But just for your simple kind of version, what we'd be looking for here, for example, is the last up candle before an impulse move down that breaks market structure. All right. So if we're looking for an example on the charts, right, what we can see here is you're moving up. We're in a bullish structure here, higher high, higher low. We break out above here to come into this level, right? Now what we're looking for here is the last up candle before this impulse move down that also led to the break in market structure, which is here. When we draw this across, right, what we can see quite clearly is this is the area that price targeted in this impulse move that we found so many sellers, right? And actually, let me make that red to make that a bit clearer. Price comes into those order block of sellers and then sells off. But actually this here, the fact that it doesn't go all the way down to take out these lows and especially back to this weekly level shows us that there's some strength left in this, all right? So while we had this sell-off, this was clearly an aggressive corrective move rather than a reversal of trend, okay? But once again, that's where we are here. So again, it's all about, like I said earlier, telling ourselves this story. Key high time frame resistance from this order block, resistance from the mother bar high. We either come back and retest this and sell off lower, in which case we target the inside bar high, yeah, or these lows, yeah, or we reclaim this, in which case we then use that as a fuel to move higher. And where's our next target? the weekly level up here. All right. So that's what I'm currently watching for, guys. All right. That's what I'm currently watching for. So, Raki, hey, buddy. Can you go into a bit more detail on the divergences and what to look for? Sure. Well, I tell you what, the very best thing to do, mate, is come and grab me on Twitter, BC_Richfield. Just drop me a comment or something in one of my posts, or drop me a message, or ideally one of the comments so other people can see it as well. I'll share with you our divergence chart, teaches you how to spot bullish divergences, bearish divergences, hidden bullish divergences, and hidden bearish divergences, all right? And what the parameters and the rules around those are. So please do that. Come and catch me on Twitter. I shared that with some people from Monday. They found it really useful. So do come and grab me again and I'll ping that across to you, mate. And then you can have a look. It's a really, really good thing to look for in terms of marking it up manually on the charts. But just to give you a quick example, you see this here on our RSI, we've got this low to this high, yeah? So what we want to do is we want to measure the same points, right? And forget that these are red, doesn't matter, it's just purely indicative. We want to measure these 2 points, yeah? We want to find the wicks, which in fact, so it doesn't look so, blank the wicks out. We put that like that and that like that. Right, so we've gone from here to here. What we're looking for is a difference in what the price action is telling us versus what the indicator is, right? This indicator is showing us the momentum. This is showing us the price action. The momentum on the indicator is going from low to high, showing us that there's bullish pressure. Yet, when we mark the sim of the 2 wicks, bear with me. So when we mark the 2 wicks, what we can see is we've got price action moving down, yeah? So as price action is moving down, this is moving up. This gives us our bullish divergence, yeah? And what that means is that the difference between the two can either be levied up, or it means that we've got a change in momentum, and normally a change in trend. All right, bud? But do come and hit me up in the chat, yeah? On Twitter, sorry, and I will send those over for you. But you can probably see this a bit clearer if I do it without those lines on there anyway. Yeah? So there we go. Price action's moving down, momentum's moving up. We get to the point here with a little bit of confidence. We get our divergence confirmed. We close back above our key support resistance level. We flipped it now back to support. We can take an entry here, or we can take an entry here on the retest. Or, as I do, and again, not recommending you all do this in any way, but for me, I then wait for a confluent divergence. Yeah, then that gives me the high probability trade and trend setups. Now, something else I want to cover with you guys very quickly before I go. Had a lot of questions about, do you spend so much time behind the charts? How do you spend so much time behind the charts? Is there a way to not spend much time behind the charts, etc.? Look, you don't want to be spending your whole life behind the charts. What you want to be doing is you want to be executing. You want to be studying. You want to be studying the charts. You want to be putting a TA out on there. You want to be getting your levels together, right? And then from there, you want to set your alerts. Yeah. So this trade, for example, here, the short trade up here. Let me just pop this back on. I had my 4-hour bias. Remember, that's the red arrow. We then got the 15-minute bias here. When we'd had this sell-off, I wanted to wait for a 15-minute divergence, right? That was my key trigger. So I've got a 15-minute divergence here, yeah? So we're in here. We've got our 15-minute divergence. Now, for me, I'm thinking, okay, we get the here. I'm in London, so we're 1 o'clock is the change, which is the 4-hour close. That's when I'm interested to make sure we've confirmed the divergences and that we've got the time, and we're continuing on with the momentum, which we can see here on the RSI is still to the downside. So then I'm just simply going on here and I'm going, right, 5-minute chart, confluence here from our divergence. I'm setting my alerts here. Price sells off. I wait for price to pull back into our key target area. When I get the low time frame trigger, I'm entering, right? That way, I don't just have to sit there and just look at charts all day, right? I can do my TA. I know where my levels are, and then I can just focus on executing, all right? But something that I've found very, very interesting recently, and something that I've traded a lot, and let me just pop this on for you. This has been tweaked for crypto by someone that's infinitely smarter than I am. but it just represents a different traditional market trading sessions. Yeah. So you've got Asia, London, New York, close. Yeah. Which is like Australia, bits and pieces like that, Pacific. So what I've been using quite a lot recently to help in terms of with trades and looking at bias is I trade the London and the New York sessions with a heavy focus on the London New York crossover, right? So as we can see here, we've got momentum here. Beginning of the London session sells up really, really high. So what was I waiting for here? I'm waiting for London's high to be set. Yeah. Has that set the high of the day? Don't know. But when we trade into it here, right, what do we get? I get my divergence. I get price coming back below this key level, right? This is our key mother bar level, remember. We've got our RSI up in oversold. All of a sudden, that to me is a great opportunity for a scalp short. All right. Now, if we continue looking across at the other sections, what we can see, London into New York, nice impulse move to the upside. All right. Weekends are typically a little bit flatter. All right. Obviously, because you've not got traditional markets. But this is beautiful. London into New York. Yeah? Perfect. Perfect, perfect, perfect. And what do we use as confluence? Well, we take the Asia's low, run that low, close above it, confluence from our RSI, and you can bet your bottom dollar that if we flick this on here, let's just replay it, save the data loading. Internet has been absolutely horrific today. There we go. There's our bull div. Yeah. So again, rinse and repeat. Yeah. Rinse and repeat. Piotr, good to see you on the stream again, buddy. Do you trade kill zones or entire sessions? Yeah, I don't use the terminology kill zones myself. I know exactly what you mean though. But yeah, I'm targeting really. So I target the London to New York crossover. That's when I'm guaranteed that I'm going to be here, right? That's why I run these streams at this time as well, because if there's any suitable opportunities, then we can take the trades live together, or I can certainly trade it and, show you guys how I would trade it. But in this instance here, for example, my time, I'm looking at 1300, which is here. We're going into the open of the session, which is 1400. So it gives a little bit of the lead in, gives me time to mark my prior levels. What am I interested in seeing? Seeing Asia's low, we run Asia's low, we close back above Asia's low. We've stacked divergences on the RSI, we've got our divergence on the B Pro. Then we can look to trade this higher. And again, going back earlier, guys, to everybody when we were talking about targets, where have we targeted here? Quite simply, which we can't see it there actually, unfortunately, but it's the mother bar high. We wouldn't have had that. I don't think that ran back further here actually. So what we would do is, once again, we're looking for these consolidations. What's going to stop price? Price is just hunting for liquidity, right? Just hunting for liquidity. So when we're up here, I'm looking here at this move up before we sell off, or at minimum, this impulse move up here, all right? Now, for me, I'm looking at this consolidation, right? And I'm saying to myself, okay, if there's orders in here and this is the last key decision-making point for price, then that's where I think we're going to ride to, yeah? So then we target that. Again, while we're going up though, if we're entering down here, we want to be aware of this area as well. We've got a lot of caps here on the market, there, as we go along, right? So that's what I like to do. I like to trade, and I especially like to target the London to New York crossover, utilizing traditional markets. Razoon, my man. Mate, this legend, he's just joined in the chat. This is the guy I was telling you about earlier, guys, that has the sick approach to using Fibonacci's. We did an amazing live stream together last week. He was educating me on all kinds of time-based principles as well. Do go and check it out. And please, 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 please start following this guy. He will just blow your mind with stuff, all right? And got some amazing content coming up that we're planning to do together. And again, trades with us over at the Nest, and just an absolute dude. Application and mindset towards price and Fibonacci work that he does is absolutely sensational. So do go and check that out. So one thing I wanted to finish with you guys on, let me just turn these pretty colors off, unless you've got any... so just a very quick question here from YouTube user. Unfortunately, mate, so they just asked the question about the the colors that I had there that signify the different time changes for the different sessions. So unfortunately, the person that made that doesn't support the code anymore. So I've not the kind of thing I've been able to recommend to anyone. However, what you can do, right, is if you make a note of this, the times that I'm using here. All right, I'll pop these on just so you can see. All right, so we've got the opening of the Asian session. I'm interested in from 1 a.m. That's my time. I'm UTC +1, so that's midnight UTC, right? Then 6 a.m. Yeah, for this kickoff to the London session, UTC again, and then 12 a.m. or midday UTC again, right? And then we come back in at 2100, which we then run through until 1 a.m. So it's this cycle that goes through Asia to London to New York to close. All right, it can really help sometimes, guys, because it allows you to understand where the volume is in the market, right? When traditional markets are buying, selling, what that's doing to risk. All right, so do keep an eye on that. Everybody that's in the chat at the moment saying thank you is really, really kind of you. You're absolutely welcome. Going to be live every Monday and every Wednesday as well, bringing some of this in. What we can see at the moment on the chart over here as well, when we're looking at BTC, is we're driving into these lows here down on the 15-minute RSI. We can see again London, New York crossover. So the question for me here is, if we're looking at that section there, what I've got my eye on here that I think might catch people out is if we're going to get some kind of reversal here with price being pushed down low. If people are going to get into this move too late, yeah, I think there's a chance we see something like this, right? And that would be your buy signal. Reclaiming this level here. If price runs it, flushes below, closes back above the range, above this high that sweeps the low, then we're looking for our entries here, trading it in, backing up to the mother bar higher. If it holds the break down below here, yeah. So if we do something more like this, yeah, and we kind of chop around, then when we break that key low, right, that then becomes our trigger here to look for lower prices. All right, guys. So let me just ping onto the DXY very quickly before we finish this off. Sorry, Naam. Bro, which indicators are you using? So I've got an RSI here that I've hacked a bit of code into that just shows up some of the divs. There's a guy called Fikira who provides one on TradingView that's absolutely excellent, if that's of your interest. But where I place all of my faith in terms of my divs is in B-Pro. Now, B-Pro is a multi-purpose indicator from trend, Bollinger Band style, baselines, which is a combination, and dynamic moving average. I use it mostly for divergences because I find that they're so accurate. Yeah, especially when you move your high time frame buys, you go onto your low time frame. That's what I'm using to find these. Obviously, just along with really simple support resistance levels, ranges, falling wedges, bits and pieces like that. Yeah, so do go and check that out. You can get B-Pro. I'm sure there's a link down in the description on YouTube. If there's not, just come and ping me on Twitter and I'll direct you over to the page. The other thing to say as well, guys, is we've got an amazing training community over at the Nest doing incredible things. Burb, the community founder, is currently speaking in Dubai today at that huge conference. He's one of the key speakers over there. Incredibly knowledgeable guy. Brilliant community full of fundamental traders, price action traders like myself, algorithmic traders that are building systems. So if it's a place, if it's something you're interested to learn and know more about, then I'm sure there's a link for a free trial in the description below. And again, if there's not, just come and hit me up on Twitter and I will provide you one. To everybody that's saying thank you for the stream, thank you so much. Really kind of you. Please do pop back every Monday, every Wednesday. Monday is 11 a.m. UTC, and then Wednesday is at midday. Wednesday, the idea of it is we run these streams a little bit longer. If we see some trade opportunities come up, then we jump on board, and I'll be doing some live scalping sessions as well. Just added you on Twitter, legend. Thank you very much. Yeah, do make sure to do that. Give the other guys a follow that I mentioned as well. I will get a big shout out together this week for some people that you really do need. Guys, a bit of advice for you before I just check the DXY and sign off for the day on this, which is one of the things that helped me the most in this space and to become a professional trader from a very different career I had many years ago, is finding the very best people to learn from and trade with, right? Trading can be a lonely space, but it's something that's also full of a lot of noise. It's very easy to turn on Twitter, find all these sick traders that are pinging these amazing trades and these amazing results out there using different systems, and your mind can just get this scattergun approach to how you learn. The most important thing that I can say to you guys and what helped me was to always be building my knowledge across broad subjects in the background, but to focus on what was going to make me a profitable, successful trader most. Yeah. So I would literally I sold out of my previous businesses and I spent a year and a half, 2 years just studying intensely, trading, traditional markets, crypto, Forex. I already had a basic knowledge of trading and investing, but I decided that I wanted to really push on this as a career. And it's the best thing that I ever did. I found the fam that I've got now over at the Nest, which people that I now work with, right? So I really am, I don't want to say a success story because we're always driving on. There's always people with success. I think it's how you measure success. And for me to now be trading with such a great community of people and to be doing this, to be able to be involved with all of you guys in this way is a really, really big step. And it's just proof that if someone like me can go and do that, then you guys can go and do it as well. But be constructive with how you learn. Yeah. Constructive learning, making sure that you're finding something that suits you. Don't go and learn scalping techniques if you can only swing trade because of work commitments or family commitments. Learn something that you can do and look to master that niche. Yeah. So go very, very deep in a very, very narrow field and master that niche. All right. So one very quick read on DXY before I get too preachy, but just to show you guys something here in terms of liquidity. So see, we were talking about this low down here. Yeah, and if we now look at this here, we've just swept below that low. Turn sessions off and get rid of these. So you can just see it clearly, but you can see here, now again, we want confirmation on this, right, guys? So what we can see here is this initial reaction where prices come back in, taken out, and there's buy orders here that are spiking the price back up. Why? Because what you've got is here, you've got price that's going up. So everybody that's buying here is getting sell orders down here. If there's buyers, they need sell orders, right? So it's filling those sell orders as it then comes up. So we'll keep a keen eye on that. But just to finish off, let's just have a very quick look at the dollar index, which is something that I use as a counter indicator for Bitcoin, right? So let me... Christ, I don't know what that's done there. So I'm not really sure what that's done there. Here we go. Right. So if we're looking here on a multi-screen, right, now we've got the dollar index here. We've actually got the dollar index down there. So if we're looking at an example with the S&P 500 that we've got here, what you'll notice is if you put this on the same time frame, which this is currently on, and if we want to line these up, right, which we've got here, what we notice is when we're getting this pump, right, so when did this pump start? Here on the S&P 500, we're down 2nd of October, 2300. If we look 2nd of October, 2300 on here, we get this dump that's counter to this pump, right? It's just showing us that the dollar is telling us what is ready for risk, yeah? So dropping, good for risk, pumping, bad for risk. We look at the correlation that we've got here. We've had this series of bullishness here, or these bullish candles from DXY with an oversold RSI. That makes me think that there's a pump coming on DXY, which is why we were short on Bitcoin, all right? S&P 500 is correlated to Bitcoin because it's seen as a risk asset, all right? So risk assets pumping, DXY dumping. DXY pumping, risk assets dumping. All right, guys. Look, I hope that has been helpful. I hope I haven't waffled on and bored you all too much. Apologies if there was anybody's questions that I missed. B Carter, I can see you're on there about EMA. If you go on the Burb Nest Trading channel, mate, I've done a couple of trading school videos on moving averages. Take a look at those, have a read through. If you've got any other questions, come and tag me up on Twitter or come and join us at the Nest on the free trial. Ping me in the chat and we'll sit there and I'll run through it all with you, all right? Thank you, Romaine. Very, very kind of you, mate. Jojo, B Carter. YouTube, Darren, guys, all legends. Really, really happy to be here for you. Don't want to miss anyone out. Costi, YouTube user, Naim, Resume, Poeta, Raki. Goodness me, loads of you legends on there today. Nazi, Muzamil, Sachin, everybody that joined. I'm really, really sorry if I missed any of you out, guys. Diamond Lily right there at the beginning as well. And obviously my boy Resume and everyone else that's been in. Really, really appreciate you guys coming along to these. I'm going to be live again next Monday, which is going to be 1100 UTC. Do come along and say hello. And if you've got any questions, come and grab me on Twitter. Guys, for anybody that's interested in divergence charts, it's all free. I'll just ping them out on Twitter. You can use those. And then in the next stream, you can sit along with them and look at the different opportunities we're looking at. And hopefully next week, we're going to be in a position where we can catch some live trades together. All right. Have a fantastic week, guys. Thank you again for joining the stream. I look forward to seeing you all next week.